What if a strong US dollar is actually like secretly crushing your company's profits?
That's a really interesting way to put it.
Yeah, you've given us all these reports from the European Central Bank and the Bank of England, even some historical financial analyses.
Right.
So let's do a deep dive into how a strong dollar can really shake things up,
Yeah,
especially for businesses operating globally. What do you think?
absolutely. It's easy to think strong dollar, strong economy, right? But for a lot of companies, it actually brings a whole bunch of unique challenges. And we're going to be looking at this specifically, from the viewpoint of those who are making the big decisions, the
Right.
CEOs, the CFOs, kind of the people at the helm of these companies.
Got it. So the ECB report, it talks about how a strong euro is impacting growth in the Eurozone.
Yeah.
It's making exports more expensive, which then kind of slows things down.
hmm
This has got to resonate with U.S. companies facing a similar thing with a strong dollar, don't you think?
Oh, absolutely. Imagine you're a U.S. company, you're selling goods in Europe, right?
Okay.
A strong dollar suddenly means that your products are way more expensive for European buyers, even if your production costs haven't changed at all.
Right.
That can have a huge impact on how competitive you are in that market.
Yeah, it totally changes the game. And it's not even just about losing sales, right?
Right?
The ECB report also mentioned that business investment in the Eurozone slowed down, and part of that was because of the strong euro.
That is a really key point. When the dollar strengthens, U.S. companies, they might hesitate to put money into their overseas operations.
Makes sense.
Why would you build, let's say, a new factory in a region where, because of this currency exchange, your products aren't as appealing anymore? It becomes a risky move.
So CEOs and CFOs really have to rethink their global strategies when the dollar is, showing off its strength.
Precisely. And these ripples, they go way beyond just individual companies. The Bank of England, they're getting worried about the stability of these big financial institutions, what they call non-bank financial institutions, NBFIs.
NBFIs, okay.
These are like hedge funds, operating outside of that traditional banking system.
Okay, I'm following. Why are they worried about these NBFIs, though?
Well, NBFIs, they often do these really complex financial transactions, things with derivatives.
Oh, yeah, derivatives.
And these can make market shocks even worse. A strong dollar can add to that and make the financial markets more volatile.
So it makes it tougher for everyone to get the funding they need.
Exactly. Especially these institutions that are already using a lot of leverage.
It's like a chain reaction. A strong dollar creates this waves of uncertainty that even affects how companies plan their finances.
Exactly. And that's where strategic decision-making becomes absolutely essential.
Okay, so let's dive into how businesses can adapt to all of this.
Yeah.
One of the first things a strong dollar impacts is pricing strategies, especially for companies that export goods. What were some options for those businesses?
Well, there are a few strategies out there,
Okay.
but the big thing is there's no one-size-fits-all solution. That historical analysis you gave me, especially that BIS paper on bond pricing in the 1800s, it emphasizes how important it is to be smart about handling these situations.
Yeah, even back then, investors had to consider all these different factors when pricing bonds. Yeah. Things like the maturity dates and all those reimbursement clauses.
Right, exactly. And just like those investors from way back, today's CFOs, the pricing strategists, they got to be just as savvy.
Right.
They need to really grasp all the little details of their market, the specific product, the customer base. All of that feeds into creating a pricing strategy that can actually adapt.
So it's not just about raising prices across the board to counter that strong dollar.
Not necessarily. You might look into different models like dynamic pricing, where you're adjusting prices in real time based on what's going on in the market and those currency swings.
I see. That's interesting. But pricing is only one piece of the puzzle here.
Right.
A strong dollar also messes with financial planning, especially for global companies. How do they build up that resilience against these currency ups and downs?
That's where spreading things out, diversifying, really comes in.
Okay.
That BIS paper, it highlights how important it is to think about a whole bunch of different places to get credit from, not just the traditional banks.
So don't put all your eggs in one basket, right?
Exactly, especially when a strong dollar can really mess with how much credit costs and even whether you can get it at all from different sources.
Right. So CFOs need to think outside the box.
Definitely. Explore those different financing options, maybe even consider using different currencies for debt.
Oh, interesting.
Develop a multifaceted approach, basically, for managing those financial risks.
Got it.
Yeah.
So This is all pointing to the need for businesses to be more adaptable. But what does that actually look like in practice?
Right.
What are some concrete actions companies can take?
Adapting to a strong dollar might mean companies need to rethink their entire business model.
Why?
They might need to diversify their markets, start sourcing stuff from countries with weaker currencies, or even relocate some of their operations.
So it's about being proactive, strategic, not just reacting to every little change in the dollar.
Exactly. A strong dollar can actually be a good thing,
Really?
It can push companies to innovate and find those new ways to grow.
That's a good point. But we have to remember not every business is going to be affected in the same way.
That's true. Some sectors are going to get hit harder than others.
Yeah. Those companies that rely heavily on exports or those that have a big chunk of their operations overseas.
Right. Those are the ones that are probably going to feel the pinch of a strong dollar more acutely.
So knowing your company's weak spots and coming up with strategies that are specific to your situation, that's going to be key to weathering the storm.
Absolutely. And that's where things get really interesting. The BIS report, they mentioned something that I think we need to explore further.
Oh, what's that?
It's this idea of the dark matter of financial institutions, the ones that are not really counted.
Dark matter. That sounds kind of ominous.
Well, the BIS, they're suggesting that the data we have might not be showing the whole picture when it comes to how much credit is actually out there. It's because of these hidden financial institutions that are operating under the radar.
So we might not even know the full extent of it.
Exactly. And if that's true, it could mean that companies are even more vulnerable to a strong dollar than we realize right now.
That's a pretty sobering thought. It sounds like we need to dig a little deeper into this whole dark matter thing.
I agree. It could have some serious implications. It definitely needs more looking into. This whole global financial system, it's so complex and interconnected.
Yeah.
And this BIS report, it reminds us that there are these hidden risks, these things lurking beneath the surface.
Right.
Any company that's doing business globally, they need to understand those risks.
It's almost like an iceberg, You see the tip, but there's this whole massive thing underneath that could really cause some damage if you're not careful.
Precisely. And a strong dollar, it can be like a current that pushes that iceberg in ways you don't expect, potentially exposing those hidden risks. That's why being proactive is so crucial.
Okay, so let's shift gears a bit and talk about those proactive strategies. We've covered pricing strategies, financial planning, diversification. What are some other concrete steps that companies can take to minimize the risks from a strong dollar?
One area that people often overlook is talent management. When a strong dollar starts squeezing your profits, it can be tempting to cut costs by letting people go or putting a freeze on hiring.
Right.
But that can actually hurt you more in the long run.
Because you're losing valuable expertise and experience.
Exactly. And when the dollar eventually weakens again, it's going to be much harder to attract that top talent back.
Makes sense.
Remember that BCG report we looked at? The CEOs they surveyed, their top priority was holding onto their talent and developing it further, even in sectors where there have been layoffs recently. They get it. They understand that a strong dollar, it's not a time to shrink your workforce. It's a time to invest in it.
So it's about being strategic with how you manage your talent. Maybe this is the time to upskill your existing employees, train them for different roles,
Right.
or even bring in specialists who can really help navigate the specific challenges that come with a strong dollar.
All excellent strategies. It's also a good time to take a look at your leadership development programs. Are you giving your leaders the skills and the mindset they need to make tough decisions in a volatile currency environment?
That's a good point, because a strong dollar often forces leaders to make choices that might seem counterintuitive,
Right?
like investing in talent when everyone else is cutting back, or diversifying your supply chain when it seems easier to just stick with what you know.
It takes courage, strategic foresight. Leaders need to see the bigger picture, anticipate those challenges, and be able to adapt quickly to changing circumstances.
And that's where having strong leadership development programs can really make a difference.
Absolutely. It's about cultivating those qualities: adaptability, resilience, strategic thinking within your leadership team.
Okay, so we've talked about talent, pricing, financial planning, and building those strong networks. What else should be on the radar for companies dealing with a strong dollar?
Innovation. That's another crucial area. When your traditional markets become harder to reach because of a strong dollar, it forces you to get creative, look for new opportunities.
It's like they say, necessity is the mother of invention.
Exactly. Maybe this is the time to explore new product lines, target new customers, or even venture into totally new markets.
And that strong dollar, It could actually give you the resources to make those investments in innovation, right?
Right.
Your domestic business might be doing well, even if your international business is facing some headwinds.
That's a great point. A strong dollar can create this dynamic where you can actually leverage the strength of your domestic market to fuel innovation and explore those new avenues for growth. It's about turning a potential threat into a strategic advantage.
Speaking of strategic advantages, one thing that really stood out to me in that BIS paper was the potential impact of a strong dollar on mergers and acquisitions.
Oh, interesting. What caught your attention?
Well, they talked about how historical data might not be showing the whole picture when it comes to how much credit there is in the economy.
Right.
And that got me thinking about how a strong dollar could influence M&A activity.
I see where you're going with this. A strong dollar can make U.S. companies more appealing targets for foreign buyers, right?
Exactly. If you're a company with a solid balance sheet and your stock price is doing well, a strong dollar could make you a prime target for a foreign company looking to get a foothold in the U.S. market.
That's a fascinating dynamic, and it could work the other way around too, right? It might be more expensive for U.S. companies to acquire foreign companies when the dollar is strong.
Absolutely. So the whole landscape for mergers and acquisitions could shift depending on how strong the dollar is.
It just adds another layer of complexity to an already complicated situation.
Right.
But it also highlights how important it is to understand the connections between currency fluctuations, corporate finance, and strategic decision making.
It's all intertwined.
Hmm.
Currency, it's not just some number, it's a force that can really shape the future of companies and entire industries.
Indeed. It's like a complex tapestry, this global economy with all these threads woven together.
Yeah.
And a strong dollar, it's like a gust of wind that comes along and causes those threads to move and realign in unexpected ways.
That's a beautiful analogy, but it also emphasizes that potential for disruption and uncertainty.
True. But it also reminds us that change is inevitable, and those who are best at adapting are the ones who will ultimately thrive.
And that brings us to another crucial aspect, risk management. What are some ways companies can protect themselves from the negative effects of a strong dollar?
One classic strategy is hedging. This involves using financial instruments, things like currency swaps or futures contracts, to lock in exchange rates and reduce your exposure to those fluctuations.
It's like buying insurance for your business.
Right, exactly. You're paying a premium to protect yourself from the possibility of a big swing in the exchange rate.
Right. And hedging can be a valuable tool, especially if you have those big international transactions or you're operating in an environment where the currency is very unpredictable.
Absolutely.
But it's not a cure-all, is it?
It's not. Hedging can be complicated, it can be expensive, and it doesn't completely eliminate risk.
So what are some other defensive strategies that companies could consider?
Well, one approach that's becoming more popular is natural hedging. This means structuring your business operations in a way that naturally reduces your exposure to currency risk.
Natural hedging, I like that. Can you give us an example of what that might look like?
Sure. One way to do natural hedging is to diversify your revenue streams. If you have income coming in from different countries with different currencies, a strong dollar in one market might be balanced out by a weaker dollar in another.
So spread your risk across different places and currencies.
Exactly. Another natural hedging strategy is to source your inputs, your materials, from different countries. That way, you're not as dependent on suppliers who are all using the same currency.
Because if the dollar gets a lot stronger, it could make your imported materials much more expensive.
Right. But if you have suppliers in multiple countries, you can potentially offset those price increases.
It's like building a buffer.
Precisely. These natural hedging strategies, combined with more traditional hedging techniques, can create a really strong risk management framework. It lets you handle those currency fluctuations much more effectively.
It's like creating a multi-layered defense system for your business.
Exactly. You're not just reacting to the strong dollar, you're proactively getting ready for its potential impacts.
I think the biggest takeaway for our listeners here is that there's no one right answer when it comes to managing currency risk.
I agree.
It's about understanding the specific risks and opportunities that your business faces and developing a plan that's tailored to your specific goals.
Absolutely. It's about being proactive, being informed, and being adaptable. And it's about realizing that a strong dollar, while it can be a challenge, can also be a positive force for change and innovation within your company. Sometimes those challenges push us to become more creative and more resilient.
So what's the most important message you want CEOs, CFOs, and business strategists to walk away with from this deep dive?
I think the key takeaway is that a strong dollar isn't just about overseas sales. It's about understanding how those currency changes ripple through every part of your business.
Right.
From pricing and investment decisions to financial planning and even your network of relationships. It's about being proactive, adaptable, and always searching for ways to reduce risk.
That's a great point. We've covered a lot today, but it feels like we've only just scratched the surface.
Right.
The impact of a strong dollar, it's so multifaceted, it's impossible to cover it all in one deep dive.
That's true. But I think we've laid out a good foundation for thinking about the challenges and the opportunities.
Yeah.
Hopefully we've sparked some ideas for our listeners about how to navigate this complex world.
Absolutely. And one of the most valuable things I think we've highlighted in this deep dive is the importance of staying informed and being proactive.
Right.
A strong dollar can sneak up on you if you're not paying attention.
Yeah.
So it's essential to keep an eye on those currency changes, understand how they might affect your business, and be ready to adjust your strategies accordingly.
I couldn't agree more. It's all about staying ahead of the game and using the insights we get from data and analysis to make smart decisions. Decisions that set your business up for success no matter what's happening with the currency.
Well said. Now let's wrap things up with some final thoughts and key takeaways for our listeners. So we've talked about hedging and natural hedging as ways to kind of manage that currency risk.
Right.
Are there any other strategies that, CEOs and CFOs should really have in their toolbox?
Yeah, definitely. One strategy that often gets overlooked is thinking about different invoicing currencies.
Okay.
So instead of always using US dollars, see if you can invoice in the currency of the country you're selling to.
Interesting. So like if I'm a U.S. company selling something to a buyer in Europe, I could invoice them in euros instead of dollars.
Exactly. That way the currency risk shifts over to the buyer,
Okay.
and it can make your products more appealing in markets that are, really focused on price.
So it's like sharing that currency risk between the buyer and the seller.
Yeah, precisely. Of course, it takes some negotiation. You got to get your buyers on board.
Right.
But it can be a situation where both sides benefit.
It's all about thinking strategically, being flexible with how you run your international business.
Right. And another really important thing is communication. When the dollar strengthens, you got to be transparent with everyone involved.
Yeah.
Employees, investors, customers.
Especially your employees, I would imagine.
Yeah, they need to understand how that strong dollar is affecting the company
Right.
and what steps are being taken to, deal with any negative effects.
It makes sense. Open communication builds trust.
Absolutely. It helps build trust and confidence even when things are uncertain.
Right.
It also allows for, collaboration, working together to solve problems in a creative way.
So it's not just a financial challenge, this strong dollar.
Right.
It's a test of leadership.
It is. It forces companies to really look at their operations, figure out where they're vulnerable, and come up with creative solutions.
Yeah.
It can actually be a trigger for positive change, for long-term growth.
It seems like the key is to see a strong dollar not as like this impossible obstacle, but as, a strategic puzzle to figure out.
Exactly. If companies combine careful analysis, proactive planning, and a willingness to adapt, they can turn these challenges from the strong dollar into opportunities. Opportunities for growth, for resilience.
Well, this deep dive has definitely given us all a lot to think about. A strong dollar can be a real pain, but it can also spark innovation.
Yeah.
It all boils down to being prepared, being able to adapt, and having those right tools and strategies.
I agree.
Thank you so much for sharing your insights and expertise with us today.
It's been a pleasure. It's always great to really dig into these complex topics.
And to all our listeners, thanks for joining us for this deep dive into the world of corporate finance and executive decision-making. We hope you've learned something valuable and are feeling a little more prepared to navigate those ever-changing currents of the global economy. Until next time, keep exploring, keep learning, and keep diving deep.